Welcome to today's video on car loan deception and how hidden fees can add thousands to your total cost. We will walk through how the trap works, what your contract really says, how to read the truth in lending disclosures, and the exact steps to dispute inflated principles and surprise add-ons. Let's get started. Before we dive in, a quick but important disclaimer. This video is for informational and educational purposes only and does not constitute legal or financial advice. Auto finance laws and remedies vary by jurisdiction, and only a licensed attorney or qualified professional who reviews your documents can advise you on your specific situation. Always keep your own copies of signed contracts and disclosures. Here's our roadmap for the video. First, we'll explain the so-called $2,000 shock and how it happens. Next, we will define key terms you must understand. Then, we'll emphasize why your signed contract controls everything. After that, we'll uncover how rolled-in add-ons inflate your principal. We'll also walk through the truth in lending box. Then we'll run the numbers to show how a $7,500 loan can exceed $9,500 in total payments. Finally, we'll provide a concrete action plan to dispute issues and report violations. And we'll test your knowledge with quick quizzes. Let's begin with the shock. You thought you agreed to a low principal, but later the bank says your principal or total payments are thousands more than expected. This happens because consumers often confuse the amount financed, meaning the principal loan balance, with the total of payments, which is principal plus all interest over the life of the loan. Moreover, dealers sometimes roll in expensive add-ons that inflate your principal. Now let's define the terms clearly. Here are the definitions you must master. Amount financed is the principal you are borrowing, excluding interest. APR is the annual percentage rate that reflects the yearly cost of the loan, including fees and interest in a standardized way. Total of payments is the total amount you will pay over the full term of the loan, which is the principal plus all interest charges. Monthly payment is just the periodic amount due. It is not a measure of total cost. Rolled-in add-ons are optional products and fees, such as gap insurance, extended warranties, and documentation fees that can be included in your principal, sometimes without your full awareness. Understanding these terms prevents confusion and reduces surprises later. This sequence diagram shows the flow of events. The buyer negotiates terms with the dealer. The dealer prepares the contract, potentially adding optional products and fees. The dealer must present the final contract, including the truth in lending disclosures. The buyer signs the contract. The dealer then assigns or sells the contract to a lender. The lender sends a welcome letter that lists the principal and payment details. If the buyer identifies a discrepancy, the buyer contacts the lender to dispute the unexpected principal. The lender may then seek verification from the dealer. Through all of this, the signed contract is the controlling legal document. Now let's underscore the ultimate truth. The only legally binding document is the final contract you signed. Verbal promises or handwritten notes not incorporated into the contract generally do not control. Locate the truth in lending box on your contract. It must disclose the amount financed, the APR, and the total of payments. Additionally, review the itemization of the amount financed to identify any rolled-in add-ons, such as gap insurance, extended warranties, and unusually high documentation fees that may inflate your principal. Let's run the numbers to see how the total cost grows. In example A, a $7,500 loan over 54 months at 7% APR results in an estimated monthly payment of about $162 and an approximate total of $8,748. In example B, the same principal and term at 12% APR increases the estimated monthly payment to roughly $180 and a total near $9,715. If optional products are rolled into the principal, the totals can climb even higher. The key insight is that a low monthly payment can be misleading if it extends the term or hides added products, increasing the total cost significantly. Here is a practical step-by-step plan. First, gather your signed contract, the truth in lending box, the itemization of the amount financed, and any addenda. Second, mark any discrepancies such as an unexpected principal amount, add-ons you did not authorize, or missing disclosures. Third, contact the dealer in writing to request removal or cancellation of any unauthorized add-ons and ask for a corrected contract. Fourth, call your lender to dispute the principal and submit copies of the relevant contract pages and itemization. Fifth, meticulously document every interaction, including dates, names, and summaries of calls, and use certified mail where appropriate. Sixth, if disclosures were missing or misleading, or if you suspect fraud, file a complaint with the Consumer Financial Protection Bureau. Seventh, escalate to your state attorney general or consumer protection agency as needed. Eighth, consider consulting a consumer law attorney regarding potential Truth in Lending Act or unfair or deceptive acts and practices claims. Finally, throughout, focus on the total cost of the loan rather than just the monthly payment. Quiz time. Which statement is accurate? Option 1. Amount financed equals total of payments. Option 2. Monthly payment is the best indicator of overall cost. Option 3. The signed contract's Truth in Lending box should show amount financed, APR, and total of payments. Option 4. Verbal promises by the dealer override the contract. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is that the signed contract's Truth in Lending box should show amount financed, APR, and total of payments. Amount financed and total of payments are different, and verbal promises do not override the signed written contract. On the left is the monthly payment mindset. Dealers may emphasize a low monthly figure, often by extending the term, which can conceal rolled-in add-ons and increase total cost. On the right is the total cost mindset. You ask for the total of payments, compare APR and principal transparently, reject unwanted add-ons in writing, and optimize for the overall cost rather than a single monthly number. This table lists common add-ons that may be rolled into your principal. It shows where each item typically appears, the warning signs to look for, and the actions you can take to cancel or correct them. Always verify that any refund from cancellation is applied to reduce the principal balance. This timeline outlines a 30-day action plan. In days 0 through 2, review your contract and locate the Truth in Lending box. In days 3 through 7, write to the dealer requesting removal or cancellation of unauthorized add-ons and call the lender to dispute the principal, submitting contract pages. In days 8 through 14, send certified letters and maintain a communication log. In days 15 through 30, file a complaint with the Consumer Financial Protection Bureau. Escalate to your state attorney general and consider consulting a consumer law attorney. Here is the second quiz. If a lender says your principal is $9,900 when you expected $7,500, what should you check first? Option 1. The lender's website frequently asked questions. Option 2. Your signed contract's Truth in Lending box and the itemization of amount financed. Option 3. Your monthly payment amount only. Option 4. A friend's experience at a different dealership. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is to check your signed contract's Truth in Lending box and the itemization of the amount financed. The signed contract controls the terms, and these sections reveal rolled-in add-ons, the APR, and the precise amount financed. These are the key takeaways. The signed contract controls and verbal promises do not. Amount financed is not the same as total of payments. Rolled-in add-ons inflate the principal and should be identified and canceled if unwanted. Read the Truth in Lending box carefully for amount financed, APR, and total of payments. Focus on total cost rather than the monthly payment. Finally, document everything, dispute in writing, and escalate to the Consumer Financial Protection Bureau or your state attorney general when necessary. To wrap up, we explained how the car financing shell game leads to the so-called $2,000 shock. You learned how to read the Truth in Lending disclosures and identify hidden add-ons. We walked through the math to see how APR drives the total cost. And finally, you now have a practical step-by-step plan to dispute issues and report violations. Thanks for watching. If this video helped you, please like, share, and subscribe for more consumer protection guides. Share your questions and experiences in the comments, and we will read them and try to help in future videos.